supply and demand. The San Jose real estate market continues to be very strong. Stay tuned as we go into the April closed stats. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California realtor. Today we're going to cover the market stats and look at charts and talk about the market direction and how the market is doing this year compared to previous years. So let's jump into the computer. With our Santa Clara County chart, to again just give you a perspective of history. The local Silicon Valley market continues to be very strong, and it is a supply and demand problem that is increasing this intensity of the market and making it a seller's market because our supply is still very low. We've never had supply this low in April all the way back to 2000 when I look at all the history. So that tells you how extreme and low our inventory is. That's looking at this yellow line here on the chart. You see the dotted yellow line. There's a couple times where we've actually been this low, but typically it's in the winter, not in April. Also, our demand is really high. It's the highest closings in 1 month since May and June of 2010. That's 11 years ago. Again, extremely strong demand with that very low inventory. And you wonder, why are prices increasing? Well, it's April and we're starting off with a really, really strong spring-summer market. So let's look into more details. In San Jose, I'm still, of course, seeing multiple offers selling way over a record amount over asking prices because of this low inventory and high demand that I just talked about. So this is the same data, just boiled down to only San Jose. Again, you see this yellow line of inventory extremely low. The green line popping way up. That's the number of closed sales. So it's a very strong market. And do you think it kind of looks a little bit like 2017? That's why I'm putting that here. See how the yellow line is on top of the green line rather than a more normal market where the yellow line would be above the green line. We are just selling so many houses that we cannot keep the inventory available. And that supply and demand imbalance is so strong that I don't see a change in the market at this point. But is a seasonal peak coming? That's the big question. The prices showed a little change in slope and direction. So I think buyers, what I'm seeing out in the field, are getting a little frustrated with the prices, with the overbidding. Some of them are taking a break. Some of them are waiting for more inventory. As well as I do believe we will start to see more inventory here soon at some point. So prices will probably start to level off, and maybe a little less offers, but I don't see a drastic change in the market. We are not going to see a buyer's market for a very long time. So here's an overview of April stats that are closed, obviously. So the average price went up 1.3% compared to March, and year over year up 18%. Yes, I said 18% price appreciation. If you've been paying attention to prices, you probably have noticed how big of a jump they took. And the number of sales are up 48% from March, 120% from last year. Now, let's keep that in perspective though. Prices and sales are strong, but last April was right after the pandemic hit. So sales took a huge hit last April. So the year over year is a little bit fallacy comparison, because we didn't have true market last year. So prices continue to go upward because of this high demand, low supply. I feel like I'm repeating myself here, right? So the days of inventory, how many days it takes to sell all the inventory we have available on the entire market is 12 days. You step out into any other part of the country, they're usually talking months. So this is extremely strong. We're typically around 30 to 45 days here in San Jose. So 12 days is still extremely strong, showing that our supply is very low and our demand is really good. So our pending sales also are not just strong, they're holding, which is great, but when I went back and looked, they're the highest we've had since May 2016. So the demand is not just strong month to month or year over year. It is historically strong. It's been many years, 5 years to be specific, since we've seen this kind of number of sales. And the percent of inventory in contract is also just really strong at 70%. Last month it was a tad higher, but again, this is record levels. We would normally see between 35 and 45%. So we are significantly more than that. Looking back at this chart, again, what we're watching is the supply and demand imbalance. I added some yellow bars this time to compare February, March, and April for the last 5 years. So 2017, as you see, the market started off to be kind of normal and then inventory dropped and sales went really up. That's what really started to increase the intensity in the market back there. But if you're looking at our inventory compared to all these previous years, it's kind of comparable to last year, just slightly less, I would say, and not as sharp of an increase we haven't seen yet. And remember, the pandemic hit last year, so that stifled the inventory a little bit from the years before, as you saw, that were more normal in 2018 and 2019. And look at those number of sales, though. That green bar is so significantly high. That's where I'm saying that we just have had such strong number of sales that we don't see historically here for a very long time. So mortgage rates, of course, can affect the demand and the affordability, but they actually tick down a little bit. They're ticking back up. They're playing around 3 to 3.25%. Most cases 3. If you're looking at jumbo, I think I've even heard of some that are lower, and most buyers today in the San Jose market are considering a jumbo loan. But I expect by the end of the year, based on economists, it to be at 3.5%. So still relatively very affordable. Now, if we look at the S&P 500 versus home sale prices. If you've watched these videos before, I like to track it because look at this 21-year history. They tend to follow each other. There's only a couple spots where the numbers went different directions. And one was just earlier this year where the stock market started to take off and the housing prices hadn't. And that was kind of a seasonal shift of November, December, where the market kind of settled for a little bit. But the real estate market quickly caught up and shot back up just like the stock market. Unemployment slightly decreasing. This is through March, 5.1%. Again, most people are working, and this isn't an amazing unemployment rate, but it's not horrible. So this is good, and it's showing recovery from the pandemic. So looking just at the condo market, the condo market also is taking a little bit of a turn, which is really nice. There is only a 19-day supply of condos, and the sales are up quite a bit from March, 32%. So the demand has really increased. I am seeing a lot of young buyers jumping in, maybe buyers who lived at home during the pandemic are coming back to the area and wanting to buy with all the money that they've saved. If that's you, then the sooner you get in, the better, because I think there's going to be an increased demand as more corporations start taking their employees back to the office. So the inventory is down 9%, and the percent over asking has increased quite a bit, up to 104.6%. Again, because our supply and demand is starting to take a little bit of turn. Look at that. Inventory just has not increased much, and our sales have really increased. So I should expect these prices to appreciate as well because of that balance. So next, I definitely think you should check out my market predictions for 2021. I did a video last week on that if you haven't watched it. And also check out my playlist. Are you learning or trying to figure out how to buy, to sell? Do you want to get some neighborhood tours and get a feel for what neighborhood might be the best fit for you? Check out my playlist to get more information. Thanks.